now we'll get on to the fun stuff. So Mari Maldonado is our presenter today, and it is my pleasure to introduce her. I've had an opportunity of getting to know her since last summer. We met at the School Sisters of Notre Dame Women's Leadership Luncheon, which was fun. She graduated from Mount Mary with 2 degrees. In 2013, she graduated in honors, earning her undergraduate in both professional communication and business. And then she stayed on and did her MBA, which she earned in 2015. And it looks like she didn't want to leave because she stayed on as adjunct faculty, sharing her knowledge and expertise with today's students in both those departments as an adjunct faculty member. So in addition to teaching, she also owns her own consulting business and has served as the director of operations for the St. Francis Vita tax program, where she's been helping others complete their taxes for over 2 decades. And that's the expertise she's going to help share, bring to us today. So without further ado, Mari, I'm going to turn the stage over to you. And I just want to say thank you for being with us today. And thank you again to everyone who's attending. I hope we all learn a little bit to help us get through our taxes this year. Thanks,
awesome.
Mari.
Thank you so much, Carrie. I appreciate it. All right. So for those who've had me as a teacher in the past, I'm going to do it the same way around my classroom. So I'm going to throw up a whiteboard. And we're going to give this a shot. So what I'd like folks to do on the whiteboard is to indicate what is the first thing you think about when I say taxes. So to do that, there's a little icon that should have showed up on the top of your screen. You can hit the T button for text and you could type whatever it is. And so my response is fun. And anybody else can jump right on in. There should be a little board up at the top.
Mari, I'm not seeing the piece on the top.
Is yours on the bottom? Do you want to hover down on the bottom? Or are you on a PC or a Mac?
I'm on a PC and I'm not seeing it on the bottom either. Let's see.
Yeah, I'm not either.
Does all the screen share settings have to be so everyone has ability to do it? I've never used the whiteboard.
Should have ability to do it right away. Do you see the Can you see the whiteboard? We'll start there.
Yes, and I see what you typed.
Yes.
You see what I typed. I wonder if this option doesn't let me do it because I didn't set it up. Dang it. All right, we'll try something else. We'll try, oh wait, cancel. We will try just typing it in the chat box. How about that? Let's try using our fun chat box feature. So when I say taxes, what's the first thing you think about? The first thing that comes to mind? Headlines, right? So, oh, I love it. A lot of what I really hear a lot about, right? So the UGs are hilarious. The deadlines, absolutely. The not wanting to do it, Julie, I love it. Julia, sorry. That's hilarious. But a lot of people feel that way, right? It's one of those, oh my gosh, this is a pain in the butt kind of a thing. Well, hopefully today I'm going to go over a couple things that'll make you feel a little better about doing your taxes, and then a little more comfortable about what are some things that are out there for you for credits and such. So I'm going to share my screen again. And this time I've got a wonderful little PowerPoint that I've got just to kind of give us some visuals behind what we're going to go over. So today, personal taxes is what we're going to go over. And I'll cover mostly a little bit about the program that I run, a little bit about the program that the IRS started, the Vita program. And then what I know most people want to hear is what are some of those crazy things going on with the CARES Act? Because the UGs and the deadlines and all those responses, yeah, that threw a whole huge wrench in all of this for us this year. So we'll go over some of the changes there. And then I've got some interesting tips for the state of Wisconsin, things that I find most people forget. So we'll go over that. And then I've got a couple strategies for what we can do to hopefully save on our taxes, or just some ideas that people can consider. And then I'll open it up for questions. So that's kind of the way that I'm going to do things. Sounds good? Get thumbs up. Awesome. So the first thing is the St. Francis Vita Tax Program is the program that I have the honor to be working with. We are the longest running Vita Tax program in Wisconsin. So we started about 20, 25 years ago. We started. I've been doing it for 21 years, like Carrie said. Although if you ask any of my students, I'm only 28. So somehow I managed to be doing this 21 years, but I am only 28 years old, I promise. And the last 13 years, I've had an honor of running the program and managing my team. I've got a team of about 40 individuals who've been coming back consistently, a majority of them the last 12 years since I've been running the program, 12, 13 years. And between all of us combined, we have over 93 years working on this particular Vita program. So that's pretty exciting. And I like to mention that not as a, oh, we're so awesome kind of a fact, but as a piece to let folks know how much history and knowledge they're walking into, especially some of my new taxpayers who might be a little nervous. So my program operates Saturdays only, and we do about 700, just about 700, a little over taxes each year, both federal and state. We do homestead tax filings as well, and we file everything electronically for folks. So predominantly, I market to southeastern Wisconsin. However, I do taxes for Wisconsin, Illinois, Minnesota, Michigan, Colorado, Utah are consistent other states that I'm doing. And I just had a taxpayer that I've been doing her and her family for years who's moved into Georgia this year. And God bless her, this week she comes over and she's like, hey, Maddie, I'm moving to Georgia, which of course I was like, Chevy, no. And then she goes, can I fly back here next year to have you do my taxes? So I did offer for her, I'll learn Georgia state law. So don't worry about having to fly back one weekend just to get your taxes done. So it's just a little bit about, we really span the country. So it's kind of exciting that we have such great opportunities to reach people, and definitely these states that we're in, but all across the board. So a little bit about the Vita program itself. Vita is a volunteer income tax assistance program that the IRS started in 1969. And they started the program really as a way to help folks figure out what's going on with taxes. So taxes are crazy, giant, discombobulated books of information. And they felt that there really needed to be something for the community to help them understand what was going on with the taxes, and the tax law changes, and tax laws change every single year almost. So they started this program in 1969. They are across the entire country. It's pretty awesome. And it has grown. So then there's not only the group that does the income tax, but then they also have this TCE group. So tax counseling for the elderly, that focuses predominantly on helping elderly individuals file their tax returns. Just to make sure everybody across the board is getting the credits and deductions and everything that they need. Both programs, in essence, focus predominantly on low income and elderly individuals, as does my program as well. So that's the predominant population. And when the IRS started these, they really looked out to different church groups. They looked out to AARP to help out with running sites. So there's a lot of AARP sites across the country. There's a lot of church groups that offer it across the country. And then over the years, nonprofit organizations have also jumped in the mix and started helping out as well. So then there's nonprofit groups as well that do it. There's other folks. The cool thing is we all use the exact same program that some of the paid preparers use. So where folks can go someplace else, and I'm not knocking them, someplace else, I am knocking a little bit about their pay, and charge for fees, we do the exact same thing, and in some cases on the exact same program at no cost to the community. And that's one of the biggest blessings. Across the entire country, there are over 10,000 volunteers between both Vita and TCE, which is kind of incredible. So this wonderful taxpayer of mine that is moving to Georgia, the first thing that I said to her is, I can get you hooked up with somebody in Georgia. That's not a problem. but she wants to come back or have us do them anyway. So it's a really cool program that's really spans the entire country, and it's a great service that all of us across the board are offering. Probably the biggest thing to note there is all of us, we do this for the love of numbers or for the love of taxes, really. So it's a non-charge service, and we all do it as volunteers, which is kind of incredible. Then when you think about 93 years of history. So having that much experience, and everybody comes back year after year. They're doing it for their passion. They're doing it because it's absolutely something that we absolutely love to do. So now on to the fun stuff. CARES Act. There were two of them last year. The first CARES Act and the second CARES Act. Some of the biggest questions that I get right now are in regards to the stimulus checks. When you file your taxes, if you haven't already, they are going to require that you let them know how much you received for both the first and the second stimulus check. And that one throws everybody for a loop. They're like, why should people know? They're going to tax me on it. They're not going to tax you on it. But this year, 2020, is a checks and balance system for everybody. So everybody has to file this year, because if you didn't get your stimulus checks, we can file a recovery rebate for you now to get it. There are some interesting little caveats there. So what I find in that one, a lot of seniors may have only received the first check in the springtime last year, and for whatever reason, never got that second check this January. They're filing to get that second check. So even though we got the money in January, because the bill was passed in December, both that first and second checks do get reconciled on your 2020 tax return. A couple interesting points on that as well. So for folks that had kids, so if they had a baby in 2020, because the stimulus credits were based off of their 2019 tax year. Lisa, I'm thinking about you and your grandbaby. Because the taxes were based on 2019 taxes, they're going to get that $1,100 this tax year now, which is awesome. The other thing that is kind of weird about this one is the IRS doesn't have a way of checks and balances between not husband and wife anymore, but a mother and father who every other year, one of them claims the child. So in 2019, mom may have claimed the child. In 2020, dad's claiming the child. Both parents will actually receive the stimulus on them because they've got no way of checks and balancing on who already has received the money and who hasn't. That same situation falls with some kids. So some kids that may have been, they're not kids. They're 18, 19. They may have been dependents of their parents in 19, but now this year they earned enough income that they can claim themselves. So when they file their return, they're not listed as dependents. So they're going to get that stimulus check, both the first and the second, on this tax return, which is kind of incredible. So however we're filing the taxes this year, we've all heard the scuttlebuzz about the next stimulus check that's in the process and in the works right now. That's going to then have to get reconciled in 2021. So however we're doing taxes for you this year, that's how that 2021 stuff is going to get, how the third stimulus check will get reconciled then. So a lot of little crazy pieces coming in there with the stimulus check. The second thing that I kind of wanted to go over with folks is income. So God bless the federal government and the states across the country that offered extra kickback for folks for unemployment. A number of folks did end up going on unemployment because of coronavirus. Some of them still are unemployed and are looking for work. So I know people so appreciate that money. Unfortunately, one of the things that the government did not consider or did not add in the CARES Act is any reprieve for any of that unemployment income. So all of that unemployment income is taxable. And that includes that extra bump. So people were getting a $600 bump or a $300 bump or a $100 bump in some states. That extra bump as well is taxable to people. And so if you know anybody that was unemployed, make sure to share that with them. It's at this point, what I'm seeing is it's a bit of a shock to folks when they all of a sudden realize, what do you mean I have to pay taxes on all of that? That one's kind of driving people a little crazy. 1099s. So here's the cool thing. Coolish. If you found yourself unemployed and needed to cash out a bit of your retirement income on a 1099, the IRS did put in the CARES Act an option to repay it back with no penalty and an option to take monies and not pay taxes on it. However, that is only based on the federal side, and it is only based on if you needed the money because of unemployment. So you needed the money because of coronavirus. So if you know of any of those situations, please let folks know. The hard part that I'm seeing, unfortunately, with that one, the state of Wisconsin did not do the same thing. So where the federal government allowed you to claim that you took the money out for coronavirus reasons and not pay taxes on it, the state of Wisconsin still is charging taxes on anything that you withdrew if you are underage and not able to withdraw from retirement. The next piece under income is the PPP loans. So a lot of gig workers or individuals filed for a little extra chunk of money for the PPP loans. When they did that, originally that money was taxable. But as long as they are using that money for paying their salary back, if it's a smaller gig worker, then that money is not taxable. There's a couple caveats for self-employed individuals, depending on what you use that money for, and then what you can constitute as expenses then for your business. So if that's a situation that falls for you or somebody you know, let me know. We could talk through the specifics of it because that one can get a little hairier. But you definitely want to make sure if you were self-employed or a gig or doing a side gig that you have somebody who knows and understands how that law works help you out with your taxes this year because it can be a little tricky. The third one, and I'm going to laugh about it because I can't tell you how many times I got this question. Is there a work from home credit? No, there is no such thing. Yeah, but I had to work from home now, Marty. And so now I have my internet costs and my electricity, and it doesn't matter. You don't own your business. You work for somebody. So the company you work for gets those credits. You do not. So that one is the hardest one for people to wrap their brain around. And I get it. And I've heard it 718,000 times by now. Yeah, but I had to clear up a space on my kitchen table and my computer is always there. That's nice, but the IRS isn't going to magically give you a I'm working from home now credit. So I say that and I say it jokingly. However, what I do know is some companies are actually paying their staff stipends for that shift of working from home. So I know of 3 companies that are actually giving everybody, had already given everybody a little bit of a bump. So good thing, bonus for them. Bad thing because it then increases their income, right? But nonetheless, the IRS as a whole or the state of Wisconsin, there is no such thing as a, hey, I work from home now, I should get a credit. And the last thing, which is really, really, really cool that the CARES Act did that I wanted to make sure I brought up, anybody that donated any money last year, in the first CARES Act, they put a stipulation because of how nonprofits were doing, and everybody was struggling last year, still are in some regards, some folks. So they put a stipulation in that anybody who donates up to $300 can take that credit on their federal tax return even if they take the standard deduction. So a couple of years ago, they bumped up the standard deduction. And so most people now will take a standard deduction instead of itemized. And so those contribution credits or your donations usually came in when you itemized. But this year, everybody, as long as you've donated, you could take up to $300. And it's really cool because where it shows up on your taxes is a reduction to your income. So it helps reduce your income, which in the end gives you a little bit of money back, which is kind of a cool credit to make sure everybody knows about. It's one thing that I keep promoting out to everybody, even if it's $50. And that's what I tell my taxpayers. Even if it was $50, just let me know because we can add it in. The caveat there is it has to be cash contributions and it has to be to a reputable organization. So it could be to your church. It could be to the alumni association of your favorite university. It can be to your school. It can be to your local nonprofit that you absolutely love. Any of those sort of things would constitute as a credible deduction. It cannot be Venmoing a friend money because your friend is in need. It cannot be somebody sends something out via social media that they're looking for money and you contribute there. Those things it cannot be, but it can be any valid nonprofit organization. And again, it's up to $300, which is really cool. And I see, is that a question that came in? Do we want to take that now? Okay.
Go ahead. No.
Oh yeah, thank you. Yeah, the crazy GoFundMes. GoFundMe doesn't count. Thanks, Kayla. That's the word I was thinking of. GoFundMe does not count, unfortunately. It's only a credible nonprofit. Thank you. All right, so that kind of wraps up what I really wanted to cover on the CARES Act side of things. Now moving on to the state of Wisconsin. So our wonderful Wisconsin Department of Revenue. So there are some really cool credits that Wisconsin offers that other states do not offer. And the first thing is the Homestead Credit. These are things that, God bless TurboTax, or other places that you can get your taxes done. They may not, because they may not be accustomed to doing taxes predominantly for low-income individuals. They may not understand that this is out there, and TurboTax can't tell you these things. But the Homestead Credit for anybody that their household, so husband and wife or single parent household, earned under $24,680, they qualify for a homestead credit. And the homestead credit is a credit that's based, I usually like to explain it to folks, between your income and the amount that you pay for rent. So between the two of them, there's a credit that you can get in the state of Wisconsin. So as long as you make under that $24,680. For seniors, what I find is, or the couple things that I have to add on there is the entire amount of Social Security counts there. So if you get Social Security and pension, the full amount of your Social Security and the full amount of that pension counts, and you have to be under that $24,680. Is homestead for gross rent or net? It is gross. So there's a line item on the tax return, and that on the federal side that the state of Wisconsin looks at. So that's what it does there. Good question. But $24,680 is what they're looking at. What I always recommend for my team, let's check it anyways, right? If they're really, really close on the line, I'd much rather check it and you get $25 extra than not check it and you don't get it. So that's a really cool credit that the state offers. So the state of Wisconsin has both the homestead and then they have a school property tax credit. Now, they both kind of do the same-ish sort of thing. Homestead is geared more towards folks that are under that specific threshold. The school property tax credit is a credit that everybody can get as long as you live in the state of Wisconsin. So if you live in the state of Wisconsin and you rent or you live in the state of Wisconsin and you have property taxes and you pay property taxes, there's this magical line on the tax return for school property tax credit. The maximum you can take as a deduction is $300. And this particular credit, it is reducing your tax. So if you hear tax people talk, sometimes we talk about the front end of taxes and the back end of taxes. The front end of taxes reduces your income, so it helps your tax go down. The back end of taxes reduces your tax. So if you owed $1,000 or you should pay $1,000 in taxes, you get a $300 credit. Now you only pay $700 in taxes. So there's a front end and a back end. And the school property tax credit comes on the back end, which is really awesome. I don't have on here, but if any of you are married and both the husband and wife work, there's a wonderful married couple credit in the state of Wisconsin. It is calculated based on the income of both the husband and wife. So both husband and wife have to work, or they are a little more open-minded. So it could be wife and wife or husband, husband. They do that as well. So both spouses have to work in order to get that credit, which is kind of awesome. So one of the hidden credits, so the next three that I'm going to go over are hidden credits, because there isn't necessarily a line where you can see where this falls on the tax return. But when we enter taxes, there are some background schedules where we can add this information in. The first is education credits, and this is huge, because the federal government has the education credits that they offer, but the state of Wisconsin does as well. And a lot of people miss that. So if you're in school, take a look and make sure you got those education credits on your tax return for the state of Wisconsin. So TurboTax, awesome, but they also don't often translate from the federal side to the state side. A lot of tax programs are built to work predominantly with the federal government. And so then the state stuff is kind of just added on. So some of these things can get missed. So make sure you check out the state credit for education. The second piece on there is itemizing. So back in the day when we used to bring all of our receipts and we used to add in the amount that we donated, and if we owned our home, we had the property taxes and the mortgage interest, and we did all of those things on the federal side. Even though on the federal side, it doesn't make sense to itemize anymore, it's still important that you put that information in the system, because it increases your standard deduction on the state side. So the federal government took a bump on their standard deductions, but the state, did not. The state of Wisconsin standard deduction is still based on income for the taxpayer. So by adding anything that you would normally, when you used to itemize on the federal, it gives you your standard deduction for your state of Wisconsin and a little bit of an itemized bump. So that's kind of important there. For anybody who is on Social Security, you also want to make sure the state of Wisconsin pulls off how much you pay for your Medicare, which is on there. So the amount that's on your Social Security bill, that ends up coming off for you as well. Again, it's one of the little hidden ones. And the last one is the state of Wisconsin. Every state does something different for veterans. The state of Wisconsin has some really, really great benefits specifically for veterans. So if they have some of their veteran benefits aren't taxable. If they get authorization from the state of Wisconsin, they can get back the money that they paid in for property taxes. Those are two of the big ones that the state of Wisconsin offers. That property tax payback is huge, especially now. But that's one that not a lot of states offer. So if you know anybody that's a veteran, please make sure you have them double check their taxes, because there are some little hidden areas where they can get some extra money coming back to them just because of the service that they've provided and offered. So that's the state of Wisconsin. Most important thing is really, I think between both the federal and the state, taking some time to take a look at it yourself and see if you have any questions and make sure you're asking that of the person who's preparing your taxes or me. I mean, shoot me a message. Hey, Maudie, can you take a quick peek? Is there anything that I might be missing? Totally open to that if anybody wants to do that. So the biggest thing that I usually tell my taxpayers when I'm working with them is, we're looking at this together to make sure we have everything in the right places and we have everything that you should get and that you need. Because it really becomes both of our responsibility to make sure that that's an accurate return when we turn it in to the IRS and the state of Wisconsin. So now on to some fun tax saving strategies. So I came up with just a couple off the top of my head. One, like I've already mentioned, really making sure that you're getting everything that you deserve and that you should get. So if you have kids, you're getting all of the earned income credit or the child tax credit. You're getting your education credits on both sides. So both the federal government and the state of Wisconsin do earned income credit. They both have child tax credit amounts. They both have the education credit. So you really want to make sure that you're getting, if you get it on one, that you're getting it on the other. A lot of my taxpayers like to refer to the checks as the big check and the little check. So the big check's always the federal government because that's the one that they think of that has all these credits. But yes, the state of Wisconsin's generally the small check, but it can be a little bigger as long as we're making sure you're getting all of the credits that you should get. A couple things on the child tax credit that I want to mention. So it was just bumped up to $2,000. It used to be $1,000. And yes, fingers crossed for anybody that has kiddos or littles. That is right now in the bill. They're talking about bumping that up again to $3,000 per child, which is pretty incredible, especially for single parent households or anybody with kids. Gosh knows they spend way more than $3,000 on their kids in a year. So that's going to be a nice little bump as long as it passes with it in there. And everything that everybody is negotiating and saying so far is it really looks like it should. So I say that, but it's not going to affect taxes this year. We will more than likely see it next year for the 2021 tax season. So on to some fun strategies. Really low-level strategies are your 401k and your IRA contributions. So I tell everybody, make sure you max out with your place of employment, whatever their match is going to be for that monies. So if they match you at the first 5% of your salary, yeah, you put in that first 5% of your salary. What happens is it reduces your income. So you get taxed on less income throughout the year. And as a bonus, you're saving for retirement. So it's a two-pronged bonus. The IRA piece is the same thing. So if you maybe don't want to or can't put all of it coming out of your one paycheck, you can also put money in an IRA. So you're not locked to just a 401k or just an IRA. You can do a combination of them, both of them, as long as you do it under whatever that max dollar amount is for yourself, and it varies by age for the taxpayer. So that's number one. So it's a cool thing because it helps reduce your income. So overall, you pay less. The second one is some employers offer either an HSA, so a health savings account, or an FSA, a flex spending account. There are significant differences between the two. HSAs are the one that comes with you forever. You start shelling away money, you put money away, you put money away, you put money away, and you can keep that money and take it with you job after job or wherever you go. The flex spending is the one that you have to use it or lose it. And so what I usually tell folks is if you get an HSA offer at work, max it out. Put the maximum amount of money in that HSA account as you possibly can. Again, it reduces your income, so you're paid less, so you get less money each paycheck and you pay less on taxes. But because because it's an HSA and you get to keep it and take it with you forever, you can use that money anytime as long as you're using it for credible medical expenses. HSAs are really cool because if you find yourself unemployed and you have squirreled away money in your HSA, that money can now be used to pay your health insurance premiums if you're unemployed. And that is a credible deduction for that HSA account. The flex spending accounts, what I usually tell folks there is only put in there what you're going to use, because at the end of the year, if you don't use it, you've just squirreled away money for no reason. It's gone. So if you know you go to the doctor once a year and what your copay is, you know you go to the dentist and what your deductible is there, or your payment is there. If you think you're going to have surgery or you think you're going to have x-rays, those are the things that you want to budget for and plan for at the beginning of the year so you can tweak those dollar amounts and you don't lose that money. But the biggest piece in that savings part and that strategy part, really, I would max out anything you can on that HSA, because that money is yours forever and you can use it so much more in the future with any other medical type expenses. And then the last thing I usually like to mention, and this one people are like, what, is a side gig, some kind of side hustle, something on the side that you can do. So it can be consulting, it can be adjunct faculty teaching somewhere, it could be something else that you're doing. If you do it more so as a consulting or something that's 1099 based, you're proofreading textbooks for an organization, you help out with grant writing at another organization, any of those sort of things. What the cool thing is, because of how the pay structure works, you get to deduct expenses off of that income. So let's say you are doing grant writing for a local organization. You pay an annual fee to get the book that you can look up grants in every year. So all of that as a self-employed individual becomes a deduction to that income. So it's just an added bonus of a way to get a little extra monies and not have to worry about paying taxes on all of it. And this is where, yes, now that you do have a side gig and a 1099 income, you now get to deduct the space in your house that you use for working on your side gig. You now get to deduct a portion of your electricity bill or a portion of your internet bill. So now all of a sudden, those deductions that we thought everybody's getting because of work from home, you now get the opportunity to do those sort of things. As well as other things. So I buy printer cartridges, and so you buy ink, you buy stamps, all of those sort of things that you use to run your business now becomes a deduction for you. So that's the kind of cool thing with a side hustle or a side gig, if it's something that you're looking at doing to at least bring in some extra side money and save money in the long run. And that is about what I've got. I'm going to open the floor. I'm going to stop sharing so we can talk. I see some questions have come in the queue, but this really then becomes your opportunity to touch base with me on anything that maybe is going on in your lives or any questions that you maybe have specifically for me. So thank you very much. What do you got? Anybody
Is
want to
the
start?
education credit only for students that are currently enrolled or former students who are paying off loans?
Great question. So it is only for students that are currently enrolled. If you are paying off your student loan, there is a above the line on the front side credit for you to get for you to reduce your student loan interest. So there's a maximum up to $2,500 though. I'll tell you that. And then the downside of that credit is it's not a credit, it's a deduction. The downside of that deduction is if you're married and it's a husband and wife, it's still a maximum of $2,500. So even if the husband has $2,500 in student loan interest and the wife has it, it's only a maximum per household, which is crazy, of $2,500. However, I will say because of the first CARES Act and putting the student loan interest on hold, most people this year didn't pay anywhere near that, thank God, in their student loan interest for last year. But $2,500 deduction after you're already paying on your student loans is what you do get to take on your taxes. The pool credits, that's for the students that are in school now. Great question. What else do we got?
Mari, there were two questions from Mary Cost that I wanted in the chat.
Let me see where they are. If we use our RMD, we still claim it. Mary, that's a good question. I am not 100% sure on if we use our RMD from our IRA to donate, can we still claim it on the taxes? That one I'd have to look at for you. I'd have to look up to see if that one, if you use that instead, can you still take it? I'm not 100% sure on that.
Is she meaning a charitable donation? So like if you took out instead of like saying, I want the RMD as my income and I then donated a portion to a local church or something, because that's considered, sorry, I used to work for a financial advising agency back in the day, and half this stuff is sitting in my head. The other half I'm like, nope. So I think because based on income, I want to say that it is yes, but you'd have to set it up with your financial advisor to do the direct deposit to the charitable place you would want to do. But if you write a check out and you cash your RMD in, so if you know you're getting monthly payments of your RMD and you take that payment and then write a check, I don't know if it's, I mean, I'm guessing it's the same, but if you're doing the direct payment from the RMD, you have to fill out paperwork and whatnot. And I'm assuming that would be the case. Sorry.
Yeah. I'm not sure. So I'm not even, I'd have to look into that for you. So I didn't even want to go there, but great suggestion nonetheless. Homestead is Homestead gross or net. I cover that. Unfortunately, it's gross. And that's the trickier one, especially for folks that may be on Social Security, because they look at all the Social Security, not just the amount of Social Security that's taxable. Is there, here's another one for you. If we use our RMD for, oh yeah, that's on there again. Okay. Emily asked it too. Sorry. Emily and Mary, you're both thinking the same thing. I love that direct chain of thought. I would touch base back with them or let me do a little research on my end. I don't know off the top of my head and I don't want to advise you incorrectly. So I do want to make sure that I'm at least right there. Okay, the next one is education credits only for students enrolled and or does that include former students? Yep, cover that. So there's a awesome student loan interest deduction and then the education credits themselves are for the students that are enrolled. One more caveat on the education credit is you do have to subtract out the scholarships and grants that students receive. So if financial aid is going to start mentioning this to students, they need to subtract out the amount of grants and the difference is what their education credits are based on.
Will that change? I'm sorry. Will that change if, I know back in the day that students who had fellowships or grant money because they were teaching assistants, has that changed? Will that be seen as income or?
So it depends on how the school issues it. So the school can issue, the school can issue a 1042S and then it's looked at as income with the scholarship amount on there. Or if the school issues it as a straight 1098T, so just as tuition minus they count the stipend as scholarship, then it gets subtracted out of their overall education credit. So it really depends on how the school or university ends up issuing that to the student. That's a good question. Oh, we got a couple more coming in. I have a question about insurance on taxes. Okay, where's Catherine? What is your question on insurance on taxes?
Hi, sorry, I don't have a,
Yep. That's okay.
on the state taxes, you have a line for other subtractions. And in there, I can deduct my Medicare B.
Yep.
And what about other insurance payments like health insurance?
No. Well,
No.
okay, yes and no.
Oh.
So if you are self-employed and you pay for health insurance on your own, yes, we can
Yeah.
deduct health insurance, both federal and state side. On the state of Wisconsin, that other insurance, the hidden part that's on there is
Mhm.
long-term care premiums get
Okay.
included in there. So if you
So-
pay and have long-term care premiums, that gets deducted out. But other insurances like regular health insurance, vision insurance, that sort of stuff, no.
Ah, okay. Because I itemize and I often have to watch that carefully because Wisconsin, you can only count certain things as itemized deductions.
Yep. Yep. Yeah. And so depending on the program that you're using and where it calculates that, so where you're putting it in the program, sometimes it pulls it over. But what you're going to really want to watch is that the state of Wisconsin started a new form called an SB1 and an SB2. These are where they have all of that back end subtraction. So that's where you're going to want to make sure the Medicare premiums are on there. That's where you'll see the education credits on there. That's where you'll see the veteran benefit stuff on there. That's where you'll see the increase in itemized deductions. All of that you're going to find on those substitute pages that the state of Wisconsin generated. I will say, so they're there. So depending on where you get your taxes done, if you do not see those forms, ask for them, and they should be able to generate those for you.
Yeah, I use a software,
Okay.
free software.
Okay.
Yeah.
Yep. Double
Thank you.
check and make sure that you can see those kinds of forms to make sure that that's carrying over correctly for you.
Yeah, that's why I stopped using H&R Blocks because they hide things a lot. You have to really dig for it.
They
And
charge
won't-
on a per page basis. So
Well,
they're not going to print out a page.
they-
Yeah.
They have online free software,
Okay.
but if you itemize, you have to pay.
Yeah.
But they don't tell you that. All they do is they just don't itemize. And so all you see are the standard deductions. And I want the software to tell me, which is which and give me a choice, but
Yeah.
that's not free. So I
Yep.
stopped using that.
That's smart. That's smart. And they're
Thank you very
definitely
much, Maddie.
good. Oh, you are so welcome. Anytime. Is education credit only for college? Oh, wait, I think I answered that one. On the contribution credit, is that $300 based on all contributions, or can it be $300 per nonprofit? Okay. So that's the interesting one. So it's up to $300 max is all they're going to give you. But if you give $300 per nonprofit, I would add that dollar amount in. So let's say you really gave $1,200. I would put that $1,200 in for that contribution credit, because you'll automatically get that maximum of $300 on the federal side, and it'll be added to give you an extra little bump for the itemized portion on the state of Wisconsin. So 300 is the max that the federal government allowed, but I would put the full amount in, because then you get the maximum that the federal government allows, and you get that bump on the state of Wisconsin. And so that's something to be careful when you're out and about and getting it done, because if you're getting it done someplace else, because somebody else, you might say, yes, I donate, and they ask, is it about $300? And you say, yes, they'll only put $300 in the system. And that $300 isn't going to help you as much if you actually donated $1,200, right? So that's where that is helpful. And Julia, was that your question that you were going to ask earlier? Okay, good, because I did see that you had your hand. Awesome. Awesome. Great
Maddie,
question.
did you
Yeah.
see the questions? There were two different ones related to grandchildren. And can
I'm
the education credit be taken if you give money for college? And then another one is for private elementary school if they're helping out grandchildren.
So mom and dad will more than likely get the credits on the primary school or the school that the students are going to. So if they're paying for education for primary school, the parents will actually get a deduction, and that is a deduction, another of those hidden deductions on the state of Wisconsin side. Grandparents, I love grandparents to death, but no, grandparents don't get to take any deductions there. The best thing for a grandparent to do would be to invest money in a 529 plan that's specifically geared towards education. By doing that, then yes, you get a little bit of a break because you're donating into a 529 plan. And then when that money gets drawn out for educational expenses, the students doesn't, and the parent doesn't pay taxes on it there because it's a 529 plan. So that's the way that you can kind of work around that. But grandparents who are amazing and donate money to students' education, unfortunately, there's no deduction for you for tax purposes. And Julia, awesome. You want to help out with taxes? I'll take it. We could totally use some help. I would encourage you to sit tight with me for a little bit afterwards if you wanted, or I can share my email and you guys can message me back. But it's a great program. I've got an awesome team, and I'd love any help. Yeah, definitely.
I think Julia's not offering to help. I think she wants to get help.
You want to get help? Oh, heck yeah, you can get help from me too. That works as well. I love it. Thanks, Catherine. Taking a quick peek at that first, all I see is help. I'm like, yeah, absolutely. So my program's only open on Saturdays. Let's sit tight, and I could schedule an appointment with you today. So when you're on our books, we can get you in right away. And then you can see what it's like on the other side. It's actually kind of awesome. I love it. Anybody else? We have a couple more minutes to go. I thank you guys so far. This has been great. A lot of great questions. And I know taxes are one of those. I'm hoping we were able to alleviate some of the ugs and some of that frustration piece that comes out normally. Biggest thing out of anything, if I can just use it as a reminder, is really the taking ownership on yourself for making sure that that tax return is right, no matter who's preparing it, is kind of an important one. Because there's a lot of hidden stuff in the background, and sometimes places get so used to doing things the way that they've always done it, instead of looking really for what's going to be in your best interest. And that's what you really want to make sure, that somebody's looking out for your best interest.
We can still contribute or open up an IRA for last year until tax day. That still is a thing, correct?
April 15th, yes. And the cool thing with that, Kayla, last year, because they pushed the tax deadline back to July 15th, all of that pushed back to July 15th. So people were able to open up an account for 2019 or put money into a Roth IRA or regular IRA up through July 15th last year. But usually it's tax day deadline, so April 15th.
So if we're doing and maybe you can't give me advice on this, but if we're doing that ourselves, like through a third party like Fidelity, and we're opening that, and we're not comfortable with investing it in a stock and it just sits there, does it have to be invested in a stock, bond, or any particular thing, or can it just be sitting there in the account?
It can just be sitting there in the account. Okay. So they should give you a form, or you should be able to generate a form that you made that contribution to your IRA, and that is what you use to input into the tax software to state that you did do that you did contribute into an IRA. There's a little bit of a credit depending on income wise, what you're looking at for your income. Some people get it, some people don't, depending on where their income range is. But there's a little federal credit for a contribution to an IRA account.
And then my last question, sorry.
No,
I don't know if you've done a lot with the healthcare marketplace, but if we overestimated how much we made and we know that we never went back in, this is a me situation because life got crazy. I overestimated because I took on more classes, how much I was going to make. So I know that come tax time, they're going to say, hey, you said you were making X and you actually made Z. Is that automatically then going to go towards in what I pay in? So my deduction or my itemized benefits will either bring that down lower, or is that just what I owe the healthcare marketplace and there's no ifs, ands, or buts?
Great question. It actually gets factored in with your taxes. So let's say you have kiddos and you were theoretically getting a refund of $1,000, but you owed back $500 on the marketplace. It reduces your refund to only $500. So it'll actually get added right back in there. And that's a tough one. The marketplace, I'm so excited that we have it. I'm thankful that we have it. I'm thankful that people don't have to pay anymore if they don't have insurance, because that was a pain to have to explain to taxpayers. But the big one that I still find is they underestimate, and it's so easy to do, the income for the year, and then you end up paying that back now, because what they're doing is they're collecting back some of that advanced premium tax credit that they gave you throughout the year. And it hurts. It absolutely does. A couple tricks on that. If you're using a software for it, don't round your numbers up and down. Put the exact dollar amounts that are on your 1095A that you got from the marketplace, dollars and cents. Most people round up and down, but on the 1095A, I always tell my team, and I put the exact dollar amount on there, because in the end, the program will shake it out and you usually owe a couple bucks less. So if you do it that way, and every little bit helps, right? I mean, in the long run, yes, it's a couple bucks, but it's still a couple bucks. Great question.
Can you give
Awesome.
us your email address
Yeah.
and where is the St. Francis Church?
Yep. St. Francis Church is on 4th Street, which is now Bell R. Phillips, and Brown. So we're just south of North Avenue. And my email address, the best email address to reach me on, is Brown, spelled like the color, Street, all spelled out, tax lady at gmail.com. And I could put it right on here for you, wonderful ladies. I'm Brown Street Tax Lady. I'm gonna pop this slide back up so you can see it. So Brown Street, all spelled out, tax lady at gmail.com. And so you could just shoot me a message. Hey, Lottie, I met you at the Mount Mary Alumni Lunch and Learn. Can I schedule an appointment? Or I have another question. Mary, definitely reach out to me because I want to look up your questions in regards to the RMD and the contributions. I'll take a peek at that for you. Awesome.
Okay.
Mari,
Mari,
turn
thank
it over to
you
you.
so
It's that time.
So Mari, thank you again for being with us today, and everyone who attended. I hope you found this useful and valuable, and we were just so thankful to have everyone gather here today over a subject that many of us would, rather let someone else do for us, right? So thank you all. I hope you get to enjoy some sunshine today, and I appreciate y'all being here. Take care.
Awesome. Thank you.